things need to change, and we need to stop trying to bring everything on chain and make the world fit on chain. Instead, take the verifiability of on-chain trust and decentralized security and expand that off-chain. I think that is the big unlock, and I think that's where we're going to start to see more and more services and applications are being backed by Bitcoin, secured by Bitcoin, secured by ETH, and that they don't actually have to run directly on-chain. There's a trust crisis that we're facing right now. Like in the US, only 9% of people trust their Congress. This is a crisis. Like, this is a big problem. And what are blockchains? Effectively decentralized trust machines. So what we're doing is taking those mechanisms to try to verify more trust off-chain.
Hey, Sohejl here. Thanks for tuning in. Real quick before we begin, if you enjoyed this episode, if you learned something, please consider to follow or subscribe or share this episode. That helps us out a lot. It helps us to reach more people and to spread quality education across the space about crypto and Web3. Also, if you're part of a crypto project or represent one and you would like to come on the show or do sponsoring, please get in touch with us. And lastly, everything we talk about today is for educational purposes and no financial advice. Enjoy the show. All right, Warren, thank you for coming on the TEACHMEDEFI show.
It's great to be here. Thanks for having me.
So I think to start it off, you got into Bitcoin very early, I hear. Can you tell me a bit about how you discovered it and why you decided to get into crypto overall?
Yeah, so I got into Bitcoin actually originally in 2011. And I had just just dropped out of a master's program in CS at Harvard. I was in the process of selling my first company, which is why I dropped out. Building startups and doing grad school is not always complimentary, especially at certain institutions. And we were. I was doing we had sold the software company, and then I was doing a hardware company, and so we were doing a lot of PCB design kind of work, and so I was in this like very heavy design program that was rendering a file like super late at night, and I kind of had to be there in case it stalled or something. So I was scrolling on Twitter, which it was called back then. I think I joined in 2009, so still early. And I saw a link to this, like, I don't know, it was like, I forget, I remember who posted it, but I forget exactly what he said, but I'll have to go back and look. But it's something introducing like some like payment system, decentralized payment system. And I was like, oh, this is kind of interesting. So I clicked on it. It was the white paper, the Bitcoin white paper. And, naturally read it, thought it was elegant. Very interesting. But I didn't really get like hooked right away. It was like, oh, that's cool. And then I just kind of went to sleep or something. And then a couple days later, like, I want to like check that out again. It kind of stuck with me, started thinking about it. And then it just kind of like read it again. And so I actually set up a Bitcoin, the Qt client and started running a miner on my laptop. This was like, tail end of the CPU kind of phase where you could still mine, Bitcoin using laptops. And it was kind of like it's a laptop, so it was not the most efficient. It was that the Qt client was super unstable. People, brag about how stable Bitcoin is, but it used to be not stable. So the client would kind of go off, and so it was like a off and on, off again, on again kind of thing. And it's kind of like either, tending to a garden, your plants are either growing really well and you're very diligent about it, or it's kind of like, they're not doing so well. So, but, won some blocks and mined enough to like have it be interesting. And then that kind of started getting more difficult. So I actually hooked up to a GPU rack and started running on GPUs. And then things just started getting, more industrialized. But 2013 hit, and I was in a phase where I'd gone through that hardware startup and another hardware startup. Folded both of them because hardware is ridiculously hard. And this happened right at a time when Bitcoin had hit like 1,000 per unit. And I was like, I'm staking my career on this. And so basically, that's what got me to like start full time working in Bitcoin the fall of 2013, um, and started off actually working on a project with a guy by the name of Ryan Selkis. That this was like we were both working at the same startup shared office space, non-crypto things. And so we went out for drinks. He was about to shut down his company too. He's like, "What are you gonna do?" I was like, "Well, I've been mining this Bitcoin thing," and he's like, "What's that?" And so I can't remember who sent the Bitcoin first, but I think I may have sent him his first Bitcoin. He may dispute that, but I think there's a transaction somewhere. But we kind of red pilled each other, or orange pilled each other, and started kind of exploring some things. I ended up starting something called Hedgie. I was living in Boston at the time, and I moved out to the Bay Area in California, and raised very quickly raised a seed round. But Hedgie was basically solving the problem of, Bitcoin miners at the time were pretty unsophisticated when it came to selling their Bitcoin. They would mine Bitcoin, and they needed to sell the Bitcoin to pay for their operational expenditures because they weren't venture backed; they're real businesses. So they would just sell on exchange, which, as you and your audience knows, creates a lot of selling pressure. And so at the time, there was no OTC market in crypto, in Bitcoin. Most of the exchanges didn't have OTC desks. It was just really weird because crypto, is being as weird as it is, started retail first on exchange, where most financial markets start off, institution first, over the counter. So we basically created the first over-the-counter or OTC wholesale market for Bitcoin, where Bitcoin miners could sell direct to hedge funds, institutional investors, exchanges, etc. And we built everything on Bitcoin using like Bitcoin script and hash time lock contracts and multi-sig and like rudimentary smart contracts, basically. This is pre-Ethereum. And that actually alleviated some volatility, or you could actually see the VIX, which is the volatility measurement, start to kind of improve right around that time, because some of the big miners stopped selling on exchange, started selling direct OTC. So we did that for a couple of years, ran into some regulatory headwinds. But yeah, we had to kind of wrap up the operations. We sold the technology to a company called Wire, which evolved into a payments company, but they were doing a lot of OTC stuff. And I was friends with Yanni and Mike, at the, who were the founders. Didn't want to go work for them, but was happy to sell the tech to them. And then I joined Ripple in the summer of 2016, which for a Bitcoiner, joining Ripple was like boarding the Death Star, as they say. But I saw a lot of really interesting things within the XRP ledger, XRP kind of consensus mechanism, and thought I could, have a pretty big impact helping to decentralize the technology and build cool stuff, into it on the top of it. So I spent 5 years there, built out all kinds of stuff, including their now flagship product called On-Demand Liquidity, or ODL, and then had a good run. And in the spring of 2021, I left to kind of solve another problem which had been really sticking at me, which was privacy. So worked on a ZK privacy project, both working on the incremental kind of arithmetic of improving the zero knowledge protocols, and then also attacking it from a hardware perspective with some of the kind of dedicated hardware for running these ZK protocols. So, but the privacy space got pretty hot, especially after the tornado cash, and changes were delisting the tokens. Liquidity was just kind of being drained, and it was one of those, like, I didn't have the stomach to go fight that good fight again. The anarchist in me is I think semi-retired.
Are you getting old, or what's going on?
Yeah, getting old, having kids, responsibilities. So I was like itching to, and I had been hired. This was a research project out of Stanford. I'd been hired to productionalize the network and ship it. And so I was itching to really start my own company again because I'd been a founder, before a couple times. And so that's kind of what led me to starting Imua, which was previously called ExoCore. We rebranded in February. But and I can get into more about what Imua is.
Wow. Okay. That is, it's probably one of the most exciting stories we've had so far.
It's not your typical story, that's for sure.
Yeah. When you started mining Bitcoin, was that in the first epoch then?
First 4 years, yeah. I started in early, I think it was like early spring 2011, and then I remember the difficulty changed in was it, oh my god, the years are piling on, 2012 or 20, yeah, right around mid 2012, I think was it first happening. And and then I was able to kind of migrate. I remember migrate. I was in this kind of shared co-working space where I had free, like, I won't name names. It was this program where companies would donate goods and services to startups to utilize, and the model like worked great. So we had free office space, free server racks, and no one was using the servers. Ironically, so just like its compute was just cheap enough, and I was like, I'll use these. I unfortunately didn't hook up enough because I could have actually probably mined a lot more. But people are like, "Oh, that's crazy." Why didn't you just focus on mining? Like, people have to understand at this time, Bitcoin was like high probability of not being successful. Like,
Right.
probability of going to zero was pretty much like 50-50. And so it wasn't like a sure thing. So the people that basically dedicated their livelihoods before that time, I'd say before it hit 1,000, guys like Brian Armstrong, Jesse Powell, like those guys are. I have so much respect for them because they saw something even at the time when it was like extremely, even like the core Bitcoin core developers, they were still taking paychecks in dollars. So like I know a lot of core devs today who did okay, but they could have taken their full paychecks in Bitcoin. They could have like done everything in Bitcoin, and they didn't because they were not super sure it was going to work out financially. It was great tech, but like the financial side of it wasn't so certain. The market side. So like everyone assumes that anyone that got in Bitcoin at that time was like like fully retired now, which is not the case. But it's still like what's always drawn me to continue this space is just one is like the community is so cool. I can never fathom working at Web2 again, just because these communities are just awesome. I live in the Bay Area. I was just at the Science of Blockchain conference yesterday, and it's just great talking to people working in the space. It's always interesting. So, yeah.
Right. Yeah. Super exciting. I mean, because I think in the first epoch, it was like, I think the block reward was like 50 Bitcoin, which is wild. I think currently it's like 3.
Yeah. I won't disclose how much, but I definitely won a few blocks. That's for sure. It's pretty crazy. I some of it, I've made every mistake under the sun. Like some of it was lost in a wallet that was I felt like was pretty secure, but the wallet itself it wasn't very well built. And then I also like between 2011 and 2013, I was like started kind of trading a little bit. I don't have a finance background, so I didn't know anything about finance. But here I had this like effectively like free money that I had just mined, and there was ways to trade it. So I learned a lot the hard way of like how order books work, how markets work, all that kind of stuff. Because there were some markets or there's some exchanges early on that were very interesting, but also like extremely, not very well built and slow, and there was a lot of front running and just like crazy stuff going on. And so I was the guy at the table that was the junior, and just got clipped a lot. But I learned a lot. It was expensive lesson learned, but it also helped shape uh, what I know today, and like how market making works, how all this stuff works, right? And it's helpful as a founder to have a good, I think, understanding of how market infrastructure works, because you really have to consider that it's just a big part of the show.
Right. Were people quite opinionated when you started at Ripple, like going from Bitcoin to Ripple? Like,
Yes. Yeah, I got a lot of hate mail, or emails, which I every now and then I open up, and just this space is like it's very tribal, and like Imua, we like to say, Imua is a tribe of tribes because we're radically omni-chain. And but it is extremely tribal. It's incredible. It's the parallels between blockchains and religions are very similar. I mean, you even have the notion of forking, which is like religious schisms are a form of forking, and you have religious texts where you have white papers. I mean, I can go on and on and on about this, but it's very interesting, and people do get kind of caught up. And sometimes they feel justified, and sometimes not. I try to just kind of keep my head down and stick to like as much of the technology as possible, and the rest of it is just it is what it is.
right. So, did you in general go more after what you found interesting in terms of tech? Then was it?
Yeah, exactly. Like in Ripple's case, their whole notion was like, um, they're they still have one of the purest forms of BFT or practical PBFT, practical Byzantine fault tolerance consensus, where I found that just elegant, from a computer science perspective. There's something clean about it, and Satoshi actually did too. Satoshi or he or she or whatever mentioned Ripple several times on the Bitcoin talk forum as being a kind of an interesting project, and the concept of Ripple actually predates Bitcoin by several years. This like payment network, it's referred to as like Habala, where you're actually able to send and effectively lend to people within this distributed network. The only missing piece was this form of a digital unit, like a cryptocurrency that would help reduce spam on this network. And that was like the missing piece in a lot of these networks that were proposed early on that predate Bitcoin. How do you basically reduce spam? You had to have this like shared unit, and that was kind of the key unlock for Bitcoin. Was kind of proposing that, because there's been a lot of really. I mean, you can go out in history, like some of the proposals that were done, and of like different forms of eCash and everything. But yeah, I mean, with Ripple and XRP, there's just an elegance. I had a conversation with David Schwartz, who's one of the architects of the XRP ledger. He's just to this day probably one of the smartest people I've ever worked with. Just an incredible mind. I swear, his mind's like a computer. He's very good at just logic. He'd probably be as good of a lawyer as he would a programmer, just because he's all steeped in logic. But the way he just describes the reasoning behind an XRP consensus is, I think, really elegant. There's also this notion of like the best incentive is no incentive, which I think is yet to be proven out, but is still an open question. As we know, in these blockchains, they're all heavily incentivized to do things, including Bitcoin. Where in the XRP ecosystem, there's no direct incentive for people to run servers and validators. And the analog to that is like, well, people don't get paid to run email servers either. So maybe there's something there. But it was just very interesting, and I still find it very interesting.
Gotcha. A thought that I have now on incentives is you kind of need to solve for the problem of trust in some way, or but then if you manage to take that out of the equation, for example, with ZK, where you can kind of like be sure that something was executed correctly because you have the proof of it, then you might be able to circumvent the need for incentives, or
Correct. Yeah, there's a theory really that ZK itself as a technology could evolve and become bigger than blockchain, because you can scrap away a lot of the designs of like incentive models, etc., because you're just basically relying on pure math. um, I think though incentives also are what attract and form markets, right? It would be very difficult to build a pure market just on a bunch of ZK provers. We've seen this, like there actually needs to be incentives, and now that the Pandora's box has been opened and there's these incentive models with starting with Bitcoin and others, I don't think you can ever put it back in the box, so now people are going to ask, what's the incentive for me to run these ZK provers, and like how do you incentivize that? And so that's actually why I think that even though I love the elegance of zero knowledge proofs, and there are obviously scalability challenges that still need to be addressed, but I love the convergence of these pure cryptographic primitives together with economic security or economic incentives. I think that's, you tie those together, and that is a bulletproof system. And I just think that's where I think things are heading.
right. I think this is an amazing segue, actually. If I can get it right, let's see. So yeah, basically you're saying, okay, crypto economic security still matters to secure networks as well. So I suppose your project Imua kind of is like showing to the world that you think that matters, because it addresses restaking and using like the stake of different chains to secure other things as well. At least that's how I understand it. Do you want to give like a bit of an overview of what Imua is and what you're solving?
Yeah, so Imua is this universal protocol for shared security. What that means practically is Imua takes the top blockchains: Bitcoin, Ethereum, Solana, XRP, Doge, Ton, goes down the list. And what Imua does is effectively aggregates the economic security of those blockchains, packages it up for developers to be able to use to verify certain commitments that are being made in the software that they're building. These can be other blockchains. These can be bridges, oracles, or other like Web3 components that aren't directly secured by the underlying validators, or they can be something completely off chain. We work with a lot of these AI networks and services that are running completely off chain. In fact, the notion of working on a blockchain or bringing AI onto a blockchain is kind of a joke in Silicon Valley, where we're based. But that idea of being able to use the decentralized security or the decentralized trust or the verifiable trust of blockchains as effective a mechanism to kind of increase some of the security guarantees of these underlying components of these systems is very interesting. So they basically, there's been a lot of talk of like, I want blockchain, but I don't want to touch crypto. We've actually enabled a way for them for off-chain systems to do that, because they can pay or effectively rent the economic security of Bitcoin, of Ethereum, of Solana, of XRP, and pay for that. We're developing. They can pay for it in any form that they want, including fiat. So they can literally put in, a credit card, pay for that say they want 500 million of economic security from Bitcoin, and they only want Bitcoin. They can do that literally with a credit card, where they're paying some interface. What's happening behind the scene is that that's getting converted to crypto, and then the economic security is being inferred there. So this is a huge unlock. I think I'm embarrassed when I talk about the developer ecosystems of these, but I'm also very honest. We have 25,000, 30,000, maybe 40,000 on a good day developers in Web3 and crypto. There's 30, 40 million developers, software developers writing software worldwide. Those orders of magnitude difference. And crypto is not new anymore. So we've got a lot of work to do, or we've got to drastically change things to attract those millions of developers. Meanwhile, AI has come and just completely surpassed the number of developers in a much shorter span of time. So I think we have to be intellectually honest with ourselves that things need to change, and we need to change. We need to stop trying to build or bring everything on chain and make the world fit on chain. Instead, take the verifiability of on chain trust and decentralized security and expand that off chain. So I think that is the big unlock, and I think that's where we're going to start to see more and more services and applications are being backed by Bitcoin, secured by Bitcoin, secured by ETH, secured by Sol, and that they don't actually have to run directly on chain.
So what does it mean concretely? Because I think I understand the concept, but and I feel like maybe viewers kind of wrap their head around the concept as well, but I can't fully understand it practically yet. So what does it mean when you say you aggregate economic security from multiple chains and extend it to off-chain services like AI? Like, in practical terms, what does that mean? Why does the app XYZ become more secure with this? What's the mechanism, so to say?
So effectively, what we do is we're in the aggregation. It's kind of like a pool, like a form of pooled security, but it's I hate to use those terms, because when I say pooled security or mesh security, or people are always like, haha, you do this. It's like, well, no, it's like it's loosely defined, right? We're experimenting very fast, and we're not writing a white paper for every single thing that we build. But effectively, what it does is, people can stake or restake native tokens. They're not bridging, they're not wrapping onto our chain. They basically are able to stake it, on the existing chains, those underlying chains. They stay there, they don't move. Imua comes in and can effectively write to the chains to lock, unlock, or slash those tokens, and the user gives Imua protocol the permission to do that. Okay, and Imua is, itself is implemented as a layer 1, decentralized network. We use Tendermint, Consensus, Cosmos SDK components. But effectively, that's what Imua does, is it writes into the L1s to lock, unlock, and slash. That's all it does. And then it coordinates a lot of the reward mechanisms for the incentives. So it serves as almost like a meta consensus on top of these other different or below, or whatever you want to call it, these other chains. And then what we do is so since we're plugged into all these different chains, we normalize the effective voting power, the economic security of the voting power, using an actual embedded or enshrined price oracle. So by doing that, we now have the ability to aggregate this economic security across, a singular kind of price feed, or a average, weighted price of the price feed. And that embedded enshrined oracle is secured by the decentralized network of validators that the Imua is running. So, we're testnet's live right now with over 50 validators. And we'll be able to scale up to, a couple hundred. But that's effectively what it's happening, kind of, when I say, we're aggregating, but we're basically doing and normalizing across US dollar. And what that does is that allows developers to use that economic security in a useful way. And we think it's actually strong because, like, the security guarantees are a bit stronger than like your classic Ethereum restaking project or Solana restaking project, because what you have is an indexing of many different assets, native tokens. So, for instance, if Ethereum runs out of its cool factor starts dropping, and people start hating on ETH again, and it starts underperforming, that affects the economic security, of the services that are using it. So that might be like an issue. Whereas you could buoy with another token, another asset that's performing really well. So Imua doesn't take any positions on which blockchains are better or more decentralized, or we serve as many as we can and let the market figure out which ones it wants to use for that economic security. And so this is a radically omni-chain, a radically kind of agnostic take. But going back to like the analogy with religion, there's actually a lot more agnostic believers in the world than there are, the mono kind of theistic, non-agnostic. So we think the agnostic religion of blockchain is going to have its time, and very soon.
I think that's the most religion analogies on one of our shows that we had with crypto.
Yeah.
So I kind of get that part, right? But now, what do these validators do, right? So basically now they give you permission to slash as well, and perhaps they also get some positive enforcement for doing that too, so additional rewards. So, right. So, but what do they get slashed over now? Like, what do they validate now for these apps that asked for this kind of economic security?
Yeah. So basically, a set of conditions, right? There's objective sets of conditions which are easily verifiable. Those are things like uptime, things like violating certain objective commitments within the code, and those are like fairly low hanging fruit, right? Easy to prove, easy to slash.
Before we move past those, for example, let's take uptime. So is there, again, like an enshrined oracle that checks if a GPU of this GPU provider is online and communicates that back to the chain? Or like, how would uptime work in the off-chain app scenario?
Yeah. So the operators, so the validators on Imua who are running validator nodes, lots of them are also running as operators of these services. They're classically called like AVSs. I hate acronyms, so we just call them services. These verifiable services, and operators are running the actual software that these verifiable services are building. And then we have this notion of like these kind of like watchers that just kind of propose like, hey, I may have seen a violation, and they can propose, or may have seen a slashing condition triggered. And then what happens is the validators kind of come to agreement, whether that condition was violated or not, and it was like slashable. So, and the nice thing is like the validator operators that are running these nodes are running nodes on lots of different networks. They're used to coming to consensus on things. Like, this is like what they do. So asking them to also come to consensus on another set of things isn't that difficult. It's not a huge step up, right? So that's kind of how it works concretely with basically these watchers. Anybody can be a watcher. It's kind of a reputation-based kind of system. There is a form of reward where obviously if the watcher proposes something that actually does get slashed, and they get part of the a cut of the fee for kind of proposing that. So it's a pretty proven system that's operating in different formats in different networks. The one kind of big difference is that we take is the radically omni-chain kind of focus. We're bringing together all these anchor-based kind of tokens or anchor-based blockchains, and aggregating those for developers.
So, for example, the Solana node that now restakes through you guys and has now capital committed to be like, for people who don't know what slashed means, like to be reduced or taken away. That node, that entity also then validates this off-chain services uptime, for example. Is that correct?
Correct. Uptime. I mean, there's a whole set of conditions. The conditions are actually chosen by the service, and then there's a strong kind of relationship between the service and the operator, right? So they work together to kind of create these sets of conditions. Once there's a reasonable set of conditions, then they can kind of go live.
Okay, cool. But okay, the operator is the person running that service, right? But that doesn't have to be that doesn't have to be, for example, the Solana node in our example just there.
Right. I mean, like, you could be running a Solana node independent of this, and you would basically say, I'm going to also run a node on Imua, and there it's either an Imua validator node, which is securing the underlying chain, or it's an operator node, which is helping to secure the verifiable services, or both. I think 90% of our operators have basically said yes, we want to. 90% of our validators have also said they want to be operators. There's a lot of overlap because, like I said, the business of coming to consensus on something, on like some set of conditions, is effectively what validators do, and so asking them to come to consensus on another set of conditions is not that far from what they're used to.
Gotcha. Okay, and maybe to understand, like, so there's there's the crypto economic security you source from these different blockchains. What's the role of the validators of the Imua protocol specifically, because you're your own chain?
Yeah. So the Imua protocol validators are basically they're running Tendermint nodes to secure the Tendermint consensus of the Imua chain. And what that is designed to do is come to agreement on the state of Imua itself. So we had to solve like a lot of different challenges, engineering challenges. One of them was something called concurrency risk, which basically, like, if you're supporting multiple chains like Bitcoin, which has a 1 hour block time, or Solana, which is like a few seconds. How do you actually support both of them? Because they're clearly like very different. The states kind of settle in different ways, and some are also deterministic, some are probabilistic. So, like, how do you solve for this? So we solve for the concurrency risk by effectively queuing. We built this queuing system that runs across all the different chains, queues all the transactions into kind of a single kind of linear a path. We can do it actually in parallel, and then settles it on an epoch on Imua, which we set that epoch, and we can adjust that epoch. We've started pretty conservatively at like 4 to 8 hours, and then we can kind of scale it down as we go. So Imua is this true coordination system that's basically verifying the state, across all these different chains, using some kind of elegant way to solve the concurrency risk. These are things that we kind of had to. We worked on the architecture itself of Imua for several months before we even started writing code. My co-founder is the former CTO of Harmony, which was famous for introducing sharding, one of the first sharded chains. And my other co-founder is a professor at UC Berkeley named Raluca Adepopa, who's a She won what they call in the academia the Baby Turing Award, the top computer scientist under 35, and brings a lot of like security cryptography, research into this. So we really spent a lot of time thinking about the architecture first, and these were some of the challenges we had to solve to truly be like actually omnichain. And we define omnichain as not, oh, we support Ethereum and L2s. We define it as supporting actual multiple execution environments. So this includes, EVM, SVM, the XRP consensus, mechanism, UTXO chains like Bitcoin and Doge, basically, and then TON, which is kind of a permutation of Cosmos Tendermint with like a bunch of different things. So like we find it very interesting being able to support these different execution environments because it's for us it's a kind of a wedge into a whole ecosystem of different assets that we can also support.
Right. So the validators on your network, are they also like do you need separate staking then there, or do you also leverage the stake from those other chains? Like or are the validators on your network also validators of those other chains? I'm not understanding that part yet.
Yeah, so the validators on other networks can also be validators on our chain. Validators, it's not profitable to just be a validator on one chain. So most of the top validators are validated on many networks. So Imua itself has its own proof of stake, Cosmos based staking mechanism. But we're also, and this is kind of a unique thing, we're bootstrapping Imua as an L1 using the economic security of other chains. So the way we're doing this is we'll be very quickly, actually shortly, launching what they call a bootstrap contract. And what that means is people can stake or restake native Bitcoin, native ETH, native Sol, and native XRP to effectively bootstrap and initialize the Imua network. Now, how this works is as people stake, and they're effectively locking up, their tokens, and we set effectively a threshold, some target that we feel comfortable where this is the security budget that we want for Imua to initialize, right? And when that target's hit, then the network automatically the actual deposit window closes. There's a period of like 24 hours where the validators are, it's game time. It's time to go, and the network actually initializes. What this does is it allows for a really open and decentralized mechanism for bootstrapping an L1, where we're not hand selecting the validators. The validators are coming to agreement based on this kind of communal bootstrapping kind of effect. I view, and because I've done a couple L1s before. The bootstrapping of an L1 is kind of like a barn raising event. A barn raising, you get back in the day a whole community to literally they build the barn and then raise the walls and put the roof on, and it was like a celebratory thing, and then they'd celebrate afterward. But that's really what it is. It takes the community. So we've effectively codified that through this bootstrap contract. We actually call it restaked proof of stake, or RPOS. And it's a pretty novel technique, and we hope that other L1s can use it. It's completely open source, but we'll see how that goes. So now the Imua chain launches on day 0 with a preset amount of economic security that's used, that's backed by Bitcoin, ETH, Sol, etc. So we don't have to worry about that awkward time where our token price is low, and we've got this, like, we're trying to build this shared security and increase our security budget, and make all these claims. But so we kind of divorce, at least initially, ourselves from that, but can recognize that we can build that over time. So the network itself isn't so dependent on effectively the price of the token. but we think it helps to, especially at early stages, when stability is like the number one factor, and the market forces are continuing to evolve.
Mm. But does the Bitcoin restaker then have to run an Imua node in order to participate in the consensus? How does that part work? Like, I understand that the tokens are at stake, then the Bitcoin native tokens, but then you're subject to slashing conditions of someone performing the validation on your chain. And who is that someone? How is it connected to the stake? Does that question make sense?
Yeah, a little bit. So like the slashing conditions are, this off-chain service that's running. The staker, in this case Bitcoin, is effectively locking up their Bitcoin. Then what they do is they delegate to these operators, right? And that's probably the piece that that was missing. They're delegating these operators, saying, we are going to entrust you to figure out who to work with, who to secure, which verifiable services you're going to secure. And then that operator it's a reputation based system. That operator is going to do the verifiability of the services. So when there's a slashing event, that happens at the operator level, right? But it actually happens to the user's tokens, like in their wallet, right? Because it's a form of delegation, because they're effectively locked up, right? If that makes sense.
That makes sense now. Now I get it.
So for the user, it's nice because you don't have to, and I stake a lot, but really, like, staking is like there's a lot of issues with it if you want to stake on multiple networks, right? And so we kind of serve as Imua serves as this kind of this universal protocol for being able to stake and restake across multiple assets, and not just that, but also secure services that are providing sustainable yield, that you can actually count on. So this isn't just like your classic Cosmos blockchain emissions based yield. It's actually yield that's coming from profitable revenue generating services that are paying for the economic security.
Gotcha. And like you said, it's like a reputation based system for these operators. So basically a restaker can make like a diligent decision of who to delegate their stake to, since they will be subject to slashing. So you'd rather choose an operator that does perform like reliably, and like you can trust them, I guess.
Correct. Yeah, and most of the proof of stake systems operate this way. The factors you want to consider as a staker are obviously uptime, reliability. Also, like, what is the fee that the operator is taking? That's also a factor. What type of yield is the operator offering, which is basically a agreement between the operator and the service, because the service is willing to pay X amount for the economic security. So those are kind of the factors. So there's a lot of economic factors, a lot of reliability factors, and those are can be surfaced all through the dashboard that we're going to be launching. So.
Gotcha. I want to ask about like some examples of let's say AI off-chain services and how they might leverage this. But maybe before I ask that, just what do you think about the notion that a chain, let's say Ethereum or whatever, adds like externalities to its security by doing restaking, and these externalities are not part of the Ethereum chain or under its control anymore, right? Like, so the stake is not engaging anymore just in securing Ethereum, but also in securing these other services, which might end up slashing this stake on Ethereum, which leads to lower stake on Ethereum, which leads to lower security of the Ethereum chain. I think this is what I've heard of people who are like criticizing like the restaking thing. So I just want to hear your take on this.
Yeah, I mean, it's definitely I think it's a concern. But in the nature of blockchains being open, transparent, permissionless, all this stuff's like, should we restrict those externalities from using the economic security? It's like, so I'll tell you like this, right? Like, um, back in the day, crude oil was used for basically the primary use case was candles, right? Candlelight, and someone came up with an idea of how to refine it to use for petroleum, gasoline. And that obviously set off a whole new industry of automotive aviation and transportation. So is this the equivalent of the candle manufacturers saying no, crude oil must not be used for petroleum? Like, or is it like, something different? So I think we've come up and with a way to refine economic security in such a way that real people can use it, and we're not inviting them to on chain and to like build everything on chain. The world's on chain, and I've been in crypto a long time. I've built on chain, I've been doing this, but we still have to be intellectually honest with the fact that there's only 25,000 developers in crypto, so something is not working. And so I think that this is the unlock. And, does it introduce additional risk? Yes. Is that risk manageable? Yes. Will it result in some horrible, cascading effect, which, brings down every blockchain and turns it to zero? Probably not. So I think the people out there that are kind of alarmed about all this, like
Hyperventilate.
yeah, they have reason to be. But another thing, if you look at the number of slashing events on Ethereum or on any other proof of stake chain, they're so small, so few, and the actual violations, the slashing, like we're talking tiny amounts of tokens. People always like to use the case like, oh, what happens if some service comes in and they write buggy code and they slash everyone and half of everyone's tokens get burned. Like, that's assuming that the slashing penalty is half of the user's. Like, why does it have to be half? Solana has been operating without slashing for a long time. It could be a small amount as long as it basically prevents kind of like the downside, or like the preventing kind of bad behavior. Then it's enough, right? And so I think we have to be like more open-minded when it comes to these things, and not closed-minded. And I've seen a lot of closed-mindedness in every single blockchain debate, going back to like the block size debate in Bitcoin. Like, and it turns out it actually doesn't really. Most of it, like in the grand scheme of things, doesn't really matter. What matters more is making sure that crypto and blockchain stays relevant. It continues to grow as an industry. It matures. It embraces new ideas. So, we're over here just trying to refine, economic security or decentralized security and verifiable trust in a way that makes sense to everyday people.
Love that. Yeah. I think that's a great framing. So yeah, can you give me an example of some off-chain services apps and how they can leverage Imua?
Yeah, sure. So we just actually completed a demo day yesterday. We ran an accelerator program where we had 12 projects participate and started building, verifiable services on Imua. We had some really kind of exciting use cases. One, a project called Zero, which is a reputation kind of system. It's one of those things that on-chain reputation just hasn't been solved yet. There's been many different attempts. I think Zero's approach is very interesting, but they're effectively, using economic security to help to kind of secure that reputation system through incentives. Very interesting. There's quite a few verifiable kind of DeFi projects that are using economic security of Imua to back their true like decentralized finance platforms, so that they're not just reliant on and not just like trusted bridges, and they can actually have more decentralized sequencers, etc. There, so building like a whole suite of DeFi applications on different chains, and using the economic security of those chains. There's another project called Veritas, which is kind of one of the projects of the earliest phase. It's trying to solve this notion of like what is truth in the form of content. So you can think of like community notes on X, which is very much a crowdsourced kind of model, but doing that on a grand scale to help produce more truthful content, media, etc. But I think they claim themselves like they're like consensus for arbitrary things, and I find that very intellectually interesting and exciting. So you kind of have some like early projects that are just kind of getting through things. There's also an AI they call it like AI DEX, which uses the autonomous agents to execute the trades. Where as a user, you can effectively your interface is not a trading system. It's actually just a text based AI agent, and that agent can trade on your behalf. So they're using the economic security of Imua to secure that agent, to make sure that it's decentralized, because decentralized autonomous agents, that's like the key. A lot of people talk about autonomous agents, but a lot of those agents are just running black boxes that are on some AWS server. Very few are actually fully decentralized. Because it's not trivial to like decentralize and secure an autonomous agent. So they're using that. So we're starting to get in. There's a lot of other projects we've been working with, kind of that we haven't announced yet, in the AI space, decentralizing different components within AI inference networks, verifying data that the training data is exactly what they claim to be, and a lot of like cool stuff like that.
Right. Can I ask you, is this a correct way of framing it as well? It's like these operators with the delegated stakes, they have to come to consensus on something about this off-chain service?
Of course.
Okay.
Yeah. The washers are basically proposing, hey, there's been some slashing conditions been triggered. The operators have to come to consensus on whether that is true or not. If it's objective slashing condition, it's very easy to prove, easy to verify. If it's subjective, it might require a couple rounds of consensus. It also might require some social consensus. Like, these operators do have people, behind them, so they have to kind of discuss and review the slashing condition. And this is what Imua is kind of dedicated for. One of the big things when EigenLayer was proposed, Vitalik in his blog post, don't override social consensus. And I knew exactly what he was talking about because we had actually had a conversation with him before all this. And there was a concern that, that restaking was going to require Ethereum to overload, their consensus, similar to the DAO hack back in, 2016. And that we took that in mind when we designed this. So Imua is that kind of dedicated social consensus to come to agreement on these slashing conditions, so that the underlying L1s, Ethereum, Bitcoin, don't have to. So we're not asking these L1s to come to consensus on the slashing conditions that are operating on Imua. Imua has a dedicated consensus for that, and it uses Tendermint, which is battle hardened, tried and true. And we've just taken that Tendermint consensus mechanism and applied it to these objective and subjective slashing conditions.
Yeah. Okay. Fascinating. I feel like it's a complex topic, but the more you kind of like talk about it, the more you understand the relevance. So it's also, is it kind of like infusing verifiability into applications or like trust, right?
Yeah, yeah. Because the big problem that we're solving is like, if you look at like trust, there's a trust crisis that we're facing right now. Trust in institutions is at historic lows. Um, like in the U.S., only 9% of people trust their Congress people. Only 16% trust internet, media. So like this is a crisis. Like this is a big problem. And it's weird because it's happening right at a time when blockchains are hitting all-time highs. And what are blockchains? Effectively decentralized trust machines. And they're running on these like, laws of math that are objective and, can easily be verifiable. So what we're doing is taking those mechanisms and applying them to this off-chain trust to try to verify more trust off-chain.
All right, it's like kind of like, okay, I'm using a service, so someone's making a statement or whatever, and then you can go kind of like, is this actually true? And then you can have this backed by the social consensus of Imua, where you have like watchers going, okay, this was actually false or whatever, flagging this, and then the operators check and come to consensus if that was actually true or false. And they're incentivized by the stake that is on them, delegated to them to act correctly, faithfully.
Correct. Yep. Exactly. And those operators can veto, if like say a watcher says, "Oh, the slashing condition was violated," and operators say, "Actually, no, it wasn't. We're going to veto this," and they can overturn that. And I think that's powerful, to be able to do that in a decentralized way. It should not be, some small committee of, you know, chosen, selected by myself or someone else. It's a decentralized network of validators that are backed by, proof of stake, that are coming to agreement on these things and making decisions and vetoing. So if they misbehave, they're going to lose stake, right? People will unstake and delegate to someone else. So it's a pretty elegant kind of balanced system. It's not perfect, but it's as good as it probably needs to be to help improve, this notion of trust, off chain.
Right. Warren, does an operator need to self-stake as well, like to have some skin in the game themselves as well, or not?
Great question, and it's actually something we're debating still. There's some people that think that operators should self stake at least 5, 10, 15, whatever percent. Some people believe it should be zero or a tiny bit. We're kind of in the middle there, so it probably will be a small amount, but it won't be some massive amount because we do want anyone to be able to run an operator. That's important for decentralization, right? If you make the self-staking requirement too high, you run into an issue. Love the chain, but like Solana, where the requirements to run an operator are more expensive, and that drastically reduces the amount of people that can run operators. So we want to. There's a balance there, and we're still trying to figure it out. It's one of the last big decisions that will probably be made.
Interesting. So, would that be something like a minimum absolute amount of self stake, and on top of that, is it needed to have uh, a relative maximum of self stake versus delegated stake? You know what I mean? So you have like at least you need to have 5% self stake. Compared to 95% delegated stake, and it has to be a minimum.
Yeah, it'll probably be some sliding scale of like the percentage. Sorry. Let me rephrase that. It will probably initially there'll be some initial absolute value, right? And then over time it'll probably that'll probably evolve to be more of a ratio. But again, this is going to be a change that we're proposing that it's like an initial absolute value, and then over time, if community thinks it needs to change it to a more ratio base, then they can do that. But we're not going to make that decision. That'll be more up for community governance vote.
Okay, gotcha. It's just things that I'm currently thinking through myself because I also work on a decentralized AI project. So that's why I'm curious to hear your take on it.
It's tricky because like you want different requirements at different times, right? Like early stage, you kind of have to do an absolute because the ratio is like 0, right? So you have to at least kickstart it, initialize it with some absolute value, and then maybe over time you can do the ratio, because as the network grows and more, the staking market of the chain continues to rise, then obviously the absolute value starts to look pretty small. And you can't always pick the right number based on the expectations of like the future growth. So.
Yeah, gotcha. Maybe to wrap this up, I'd be curious to hear, what are you excited about in terms of AI, crypto, and the future overall?
People like talk about the downsides of AI and like the fear and like the how scary it is, but there's not a lot of talk about the upside and what society could look like with humanoid robots that are running on blockchain based trust models, that we don't have to be concerned overnight, is my humanoid robot going to come choke me out in the middle of the night? It's like, no, it's going to get slashed if it does. But that's like, I mean, those are the things I really think is going to be amazing. I think it's like the Industrial Revolution times, probably a factor of like 10 or 100, maybe several orders of magnitude. But what this unlocks for our kids and our kids, and I think it's an incredible time to be alive, to see all this shaping and have the ability to actually build stuff within it. And I think the things that are being built today are just going to have a massive impact on society. And I'm an optimist. I think as a founder, you have to be, or at least maybe a good time, you have to be optimistic. And I'm very optimistic about the future of AI and crypto's role in it. But it's not, I don't think it's as obvious as people think. And we think that, this notion of verifiable trust is going to play a huge factor in that.
Gotcha. Where can we kind of like read up on Imua, stay up to date, get involved?
Yeah, so it's just Imua, imua.xyz, and then on X at Imua, IMUA. So pretty simple. I'm also on X and occasionally come up for air and post. I won't say the word, but post and then go back down into the rabbit hole. But I'm at Warpaul, WARPAUL, if you want to follow me too.
Gotcha. We'll put those links in the show notes. Thank you so much, Roran. This was an amazing episode.
Yeah, definitely. Thanks for getting into it. Great questions.